So we've talked about the concept already, but I just want to review it before we jump into all the other stuff. Assets are resources owned by a company. And I wanted to give you this because it has a nice long list of potential assets you might see. We're pretty comfortable with cash. We know what that is, right? Usually it just means your checking account, honestly. Supplies, accounts receivable, that means money owed to you. Buildings, equipment, we're pretty comfortable with those, but these two, intangible assets and prepaid expenses, are a little weirder. So the first one, intangible assets, means assets that you don't, that aren't like physical things. So it's often like patent rights, right? Do you guys know what a patent is? If I research something and then I come up with something that is kind of new enough, different from what everybody else has out there, I can apply to the government for a patent, and the patent protects my legal right to earn profits from that thing I created. And so it certainly has value. You can even sell a patent, right? I can say, hey, I've developed this, but I'm not a marketer. I'll sell it to you for a certain amount. So those are what intangible assets are. Copyrights, right? The Nike swoosh is a copyrighted symbol that Nike paid some firm about $1 million to develop for them. I think they got their money's worth out of it, right? But it has value. You see a Nike swoosh on something, you make assumptions about it based on what Nike's brand means to you. So that's an intangible asset. And then prepaid expenses are a little bit weirder. So this would be like when I pay for something in advance. Let's say I pay my landlord for 6 months rent. How do I record that? My cash would have gone down by a full 6 months worth of rent for cash, but the value I'm going to get from that rent is stretched out over the next 6 months. So what we do is anytime we prepay for something, we record it as an asset called a prepaid expense. And so this might be called prepaid rent. And so my cash would go down and my prepaid rent would go up. And then each month when I get charged my rent, I reduce that prepaid rent and then claim my rent expense for that month. That way my books aren't weird because I've got 6 months worth of rent expense all at once and then nothing for 6 months. So just a prepaid asset is just paying, or I'm sorry, sometimes they're called prepaid assets. So prepaid expense is just paying for expense out into the future. It's really normal. That's why, like I said, I ran a storage business for years. Really normal for people to say, okay, if that's only 50 a month, can I just pay you 600 for a year and not have to deal with it, right? And so how do I record that on my books? I get all this money, but I haven't really earned it yet. So that's prepaid liabilities, debts owed, accounts payable, notes payable, wages payable, unearned revenue. So again, accounts payable just means money I owe to my suppliers, usually when they say, hey, don't pay me, you have 30 days to pay me, you don't have to pay me today. Notes payable is more formal. It's where we draw up an agreement that says you will pay me this much and you'll pay me interest, and so it's a more formal version, right? Like if you borrow money from a bank. Wages payable would be when your employees earn money, but haven't yet been paid, which happens every time between the day they work and payday, right? So you have a wages payable at any given moment. And then the weird one here is unearned revenues. This is kind of the opposite of that prepaid expense. So this is like now me as the business, my customer gives me a year's worth of pay. How do I record that, right? So I show my cash going up, but I can't record it all as revenue today. So instead what I do is record it as a liability called unearned revenue, which means I either owe the customer their money back or I owe them the service I promised them. Then each month, as I earn some of that, I record it as a revenue and reduce the liability. So, and that's something that will become easier as you work with it. Stockholders' equity, we've already learned about common stock and retained earnings. And then dividends are money we pay out to the stockholders. Okay. We've also learned about revenues. That's money that you earn by doing business. They usually get listed as something like this: fees earned, fares earned, commission revenue, rent revenue. So usually you'll see either earned or revenue in their name. Those are keywords to help you think, oh, this is a revenue. The only one that will confuse you is the one called unearned revenue that I just showed you, because that's a liability. So you have to just remember that exception. Same with anything that says payable is a liability. Anything that says receivable, that's an asset. So those are key terms that as you kind of cue into them, it'll make this sort of language of accounting a little bit easier. Finally, expenses, they almost all have expense in their name. So that's nice. So you can usually figure that out, but that's just money you pay out as part of operating a business.